Welcome to AI World TV, your go-to destination for everything artificial intelligence. Discover the captivating landscape of AI, where advanced technology finds real-life application. Subscribe to AI World TV for webzine articles, reports, podcasts, videos, live events, and latest trends. Hear from top industry leaders and discover how AI is transforming industries and our daily lives.
Imagine walking into a casino, right? You stroll right up to the roulette table, you put $7 billion down on the felt, and you look the dealer dead in the eye and say, I'm not actually gambling.
Yeah, that is a wild image, but honestly, it's pretty accurate.
Right, because that is the sheer magnitude of the financial move we are looking at today.
Mm-hmm.
And we have this really phenomenal piece of source material to guide our deep dive for you today.
Hot off the presses, too.
Literally published today, June 5th, 2026. It's in the AI World Journal, written by Sydney Armani. And the headline is just, it's a jaw-dropper. Silicon Valley's Sequoia's $7 billion fund signals AI's next phase.
I mean, $7 billion is one of those numbers that just forces you to stop and pay attention.
Exactly. But the really fascinating part, and what we want to dig into, is that the real story here isn't actually the cash. It's what that huge pile of cash proves about the fundamental mechanics of the global economy right now.
Right, because the money is really just the mechanism. What Armani's piece is capturing is this definitive, totally undeniable shift. We are no longer waiting for the artificial intelligence revolution to arrive.
It's just here.
It is here. The rules of engagement have completely changed, and, the metrics for what even makes a successful tech company are being rewritten as we speak.
And that is exactly our mission for you today on this deep dive. We are dissecting this massive tectonic shift in the tech world to figure out why the pure hype era of AI is just officially dead.
Yeah, completely dead.
And what this newly arriving scale era actually looks like under the hood.
Yeah.
So, okay, let's unpack this. Reading through Armani's article, I kept picturing the AI industry over the last few years as this, chaotic high school science fair.
Oh, I like that. A science fair.
Yeah, right. Everyone is gathered in the gymnasium showing off these really flashy but totally isolated experiments.
Yeah.
You've got the chatbots writing sonnets over in one corner.
The image generators making funny pictures of politicians in the other.
Exactly. And everyone is just shouting, look what I built, look what this can do. But this $7 billion fund from Sequoia, it signals something really sobering. The science fair is over. The gymnasium is locked up.
Time to get to work.
Right. We are now pouring massive concrete foundations to build actual industrial-scale factories.
I think that visualization is spot on because it perfectly captures the shift in utility. During that whole science fair phase, the entire technology ecosystem was relentlessly focused on proving what the technology could theoretically do, right?
Right, just pushing the boundaries.
Exactly. The goal was just to stretch the foundational models to their absolute limits. But the end of that experimental phase means the market, it no longer rewards just having a cool capability.
Because anybody can do that now.
Right. The focus has shifted entirely toward execution, building enduring trillion-dollar enterprises that actually integrate into global workflows.
Okay, so to understand how you get from a science fair to a factory, we really have to look at the people holding the megaphone here.
Yeah.
Or, I guess in this case, the checkbook.
A very, very large checkbook.
Yeah, no kidding. Sequoia Capital has just closed this massive expansion fund, which the AI World Journal specifically notes is one of the largest late-stage AI-focused investment vehicles in their entire history.
It is historic, yeah.
But what really anchors this story for me is the changing of the guard at the firm. Armani points out that in late 2025, Roelof Botha handed over the leadership reins at Sequoia to Alfred and Pat Grady.
Right, which is a huge detail.
Yeah. This means this $7 billion fund is the very first major capital allocation statement under a brand new leadership team.
And what's fascinating here is how the broader venture capital ecosystem interprets a move exactly like this. When new leadership takes over a legacy institution, literally every single LP, the limited partners providing the capital and every competing firm, they are scrutinizing every move.
Looking for any sign of weakness or strategy shifts.
Exactly. So by deploying a fund of this massive magnitude right out of the gate, Lynn and Grady are broadcasting a very specific message.
And what is that message exactly?
Well, they are looking at an AI landscape that a lot of commentators are currently claiming is overhyped or moving too fast, and they are declaring absolute unwavering conviction that the industrialization of this tech is barely even in its infancy.
Okay, I see the logic there, but let me just play devil's advocate for a second. Because if you're Alfred and Pat Grady, and you've just been handed the keys to the kingdom at one of the most legendary firms in Silicon Valley,
A lot of pressure.
so much pressure, isn't a $7 billion swing a massive liability? I mean, I'm picturing a new head coach stepping onto the field for his very first game, right? And on the very first down, he calls this ridiculously aggressive, high-risk trick play.
Right, a Hail Mary on the first drive.
Exactly.
Yeah.
How is deploying that much capital in a notoriously volatile tech sector not just blind confidence?
Well, see, that assumes all venture capital operates on the exact same risk profile, which definitely isn't the case. We have to really separate the mechanics of seed stage funds from late stage funds.
Okay, break that down for us.
Seed stage investing is the trick play you're describing. It is inherently a huge gamble. You are writing a relatively small check to a small team with basically just a pitch deck, right?
Just an idea and a dream.
Exactly. You're trying to figure out whether a specific application of a new technology will even function. But a $7 billion late-stage fund, that operates on a fundamentally different physics engine.
Because they aren't funding the two guys in a garage anymore.
Not at all. They are targeting organizations that have rigorously demonstrated product-market fit. In late-stage venture, you are looking at companies that are already generating tens, sometimes hundreds of millions of dollars in annual recurring revenue.
Wow. Okay, so the existential risk is basically gone.
Yes. The fundamental risk of, hey, will this technology even work? That has already been retired. Sequoia isn't gambling on the existence of the AI market.
So what are they doing then?
They are executing a heavily calculated strategy to pour pure accelerant onto the specific companies that are already demonstrating the operational metrics needed to dominate the next decade.
But wait, I mean, the market is littered with failed infrastructure plays that looked like absolute sure things at the time. Like, look at the VR metaverse.
Oh, the metaverse, yeah.
Right. Billions and billions of dollars were poured into that under the total assumption that it was the next inevitable computing platform. And it just largely stalled out.
It did.
So what makes AI infrastructure a guaranteed lock compared to past tech duds like that? Is Sequoia just operating on past momentum? Or is there like a specific repeatable pattern to when they deploy this kind of late stage capital?
The VR comparison is actually the perfect counterexample here, because the metaverse push was this desperate attempt to force infrastructure upon a market before consumer demand or any daily utility had actually been proven.
It was like building a highway to a city that literally nobody lived in.
Exactly. A beautifully paved road to a ghost town. And Sequoia's track record shows they do the exact opposite of that. They wait for the organic traffic jam, and then they fund the highway.
Oh, that's interesting.
Armani's article outlines this perfectly. Sequoia has this really uncanny habit of buying the plumbing right before the rest of the world realizes the house is being built.
And the timeline Armani lays out really backs that up. Like, if we look back, 1972, Don Valentine founds the firm focusing heavily on semiconductors.
Which is the literal physical plumbing of the entire early tech boom.
Right. Then 1978, they back Apple. In the 1990s, before the dot-com consumer boom really went crazy, they backed Cisco, which provided the actual networking hardware.
The routers, the switches, the unsexy stuff that made the internet work.
Exactly. And then the 2000s, it's Google. And then jumping to 2009 through 2011, right as the iPhone is fundamentally changing human behavior, they shift heavily into mobile infrastructure. They back Stripe for payments and WhatsApp for communication.
Notice the underlying mechanism in every single one of those eras, though. They aren't trying to pick the trendiest consumer toy at the absolute peak of a hype cycle.
Right, they aren't looking for a fad.
No. They are identifying the exact moment a technological capability transitions from being a niche novelty to an indispensable global utility. By deploying a massive late-stage AI fund right now, in 2026, they are signaling something huge.
That the winners have already separated themselves from the pack.
Precisely. They are signaling that the foundational winners of this generation have emerged from the noise. They are applying the exact same filters they used for the internet and mobile waves directly to the artificial intelligence sector.
Well, here's where it gets really interesting, because Armani explicitly points out in the journal that the era of raising money based solely on an AI label is totally dead.
Oh, completely. The free money is gone.
And this brings us right back to that dot-com parallel. Because back in 1999, you could take a completely mediocre, fundamentally flawed business plan, slap .com onto the company name, and investors would just blindly throw capital at you.
They couldn't write the checks fast enough.
Right. But eventually, the laws of financial gravity reasserted themselves. And Armani is saying we're hitting that exact same wall right now in 2026. Slapping AI on a pitch deck just won't get you a meeting anymore.
If we connect this to the bigger picture, it explains why the skeptics who are constantly crying tech bubble are kind of missing the point this time. The market has sobered up significantly.
Yeah, the article clearly outlines the new demands from investors like,
You are listening to the AI World Podcast, your trusted source for the latest innovations, insights, and trends in artificial intelligence, blockchain, fintech, and decentralized technologies. Each episode features expert interviews, engaging discussions, and in-depth analysis of how AI transforms industries worldwide. Stay ahead of the curve with the latest articles and exclusive reports from the AI World Journal, covering everything from emerging technologies to industry breakthroughs. For more news, global events, and access to AI World Society circle gatherings, visit us at aiworld.tv. Don't forget to subscribe to stay informed, stay connected, and be part of the AI revolution with AI World Lounge. Thank you for listening.
Glenn and Grady. They aren't messing around. They require sustainable revenue growth, deep talent pools, and above all, defensible technology.
Yes, defensibility. That is the magic word right now.
Let's drill into that phrase, defensible technology. Because in the AI space, especially over the last couple of years, that seems incredibly difficult to actually achieve.
It is very difficult.
Because during that science fair phase we talked about, we saw thousands of startups build products that were essentially just API wrappers, right?
Yep, the wrapper trap.
Yeah. They basically just built a slick user interface on top of OpenAI's or Anthropic's models. But that isn't defensible. If your entire product is just routing a text prompt to someone else's foundational model, a well-funded competitor can clone your entire business in a weekend.
Literally a weekend. And that is exactly why late-stage capital is becoming so incredibly selective. True defensibility in this new era requires proprietary, siloed data and custom infrastructure.
So, meaning data that nobody else has access to.
Right. It requires models that have been meticulously fine-tuned on specialized industry knowledge. If an AI platform is, say, orchestrating a hospital's entire patient intake system or managing a giant hedge fund's risk portfolio...
You can't just download an open source model and do that.
No, absolutely not. That isn't something you build overnight using off-the-shelf code. It takes deep integration and highly secure specialized data.
Which perfectly explains why Armani focuses so heavily on this massive AI IPO pipeline. These companies that have actually achieved that rare defensibility, they are gearing up to go public.
The pipeline's getting crowded, yeah.
But it raises a really mechanical question for me. If these startups are already generating real revenue and they have a solid defensible product, why do they desperately need a piece of a $7 billion venture fund? Why not just coast on their current cash flow until they ring the bell at the IPO?
That is the $1 million or, well, $7 billion question. Because the sheer cost of scaling an AI enterprise is unlike anything we saw in the software as a service boom of the 2010s.
How so? It's all just software, isn't it?
Not really. If you were building a traditional cloud software company back then, your primary expense was basically just hiring engineers, paying salaries. But in the AI scale era, your primary expense is compute.
The physical cost of processing the massive amounts of data.
Exactly. To dress the window for Wall Street and actually prove you are ready to be a publicly traded tech giant, you have to secure long-term access to massive physical data centers.
Right, you need the hardware.
You have to buy compute power by the gigawatt. You need tens of thousands of advanced semiconductors to train and run your models continuously without lag. You simply cannot fund that level of heavy physical infrastructure solely through early-stage revenue.
It's just too expensive.
Way too expensive. So a late-stage fund like Sequoia's acts as this crucial bridge. It absorbs those astronomical infrastructure costs so the company can achieve true global scale immediately prior to the IPO.
Okay, but wait. If the fun novelty consumer apps are dead, and the goal is this massive global scale, where is the actual value being generated?
That's at the core of the shift.
Because, I mean, the chatbot on my phone, as helpful as it might be for writing an email, it isn't generating the kind of massive corporate value that requires a $7 billion war chest. What exactly are these late-stage companies selling?
This raises an important question about how we visualize the AI economy as a whole. Because when we think of revolutionary technology, we naturally gravitate toward the shiny consumer interface, the thing we can touch and play with.
Sure, human nature. We like the toys.
But to understand the real economics here, we have to look much deeper. Think about the early days of electrification.
Right.
Everyone was absolutely mesmerized by the light bulb. It was the consumer novelty. It was magic. But the people who built dynastic generational wealth during that era weren't the ones selling little glass bulbs.
No.
No, they were the ones laying the millions of miles of copper wiring, building the massive dynamos, and constructing the power grids.
Oh, wow. So Sequoia is basically investing in the digital power grid.
Precisely. Armani's article outlines the specific targets of this capital: AI infrastructure platforms, massive data center technologies, advanced semiconductors, and enterprise software.
The plumbing.
Yes, they are funding the foundational layers that literally every other business on Earth will eventually be forced to either rent or build upon.
Let's try to make that really concrete for a second, because Armani uses terms in the article like agentic AI systems and autonomous workflows.
Both words, yeah.
Exactly. To someone casually reading the news, that just sounds like abstract science fiction jargon. But you're saying it's actually the core engine of how these companies are generating billions in value, right?
It is the defining feature of the scale era, period. When we talk about agentic AI, we are not talking about a helpful digital assistant that you ask for a pancake recipe.
Right. It's not Siri.
No. We are talking about an AI system that operates as an autonomous, high-level employee. It's capable of executing complex, multi-step workflows across completely disparate systems without any human intervention.
Okay, give me a real-world scenario of what that actually looks like inside a massive corporation today.
Sure. Imagine a massive global logistics company. A massive cargo ship gets delayed in the Suez Canal.
Classic supply chain nightmare.
Exactly.
Yeah.
Now, in a traditional human-driven workflow, a supply chain manager gets an alert. They have to manually analyze alternative shipping routes, calculate the financial hit on a spreadsheet, email 3 different freight forwarders to get new quotes.
Ugh, it's endless busy work.
Right. Then they have to log into an enterprise resource planning system, update the global inventory, and notify the retail stores of the delay. That entire process takes hours, maybe even days, and introduces massive bottlenecks.
Right, because it requires constant human context switching and waiting on replies.
Exactly. An agentic AI system changes that entirely. The very moment the Port Authority updates the status of that ship, the AI agent autonomously reads that data.
Without anyone telling it to.
Without anyone telling it. It instantly calculates the optimal rerouting options. It drafts and sends the emails to the freight forwarders, actually negotiates the new rate based on pre-approved parameters, updates the corporate inventory database, and adjusts the dynamic pricing on the consumer website to reflect the constrained supply.
Wait, really? It does all of that?
It completes the entire workflow in 2 seconds with 0 human clicks.
That is just a staggering leap in productivity. And suddenly the sheer scale of that $7 billion fund makes complete sense.
Doesn't it?
Because if a Fortune 500 company wants to deploy that kind of autonomous agent across their entire global supply chain, they need incredibly robust enterprise software.
Which requires immense data center capacity.
Right. Which requires extremely specific advanced chips. It's an entire ecosystem.
And that is the concrete of the factory we were talking about earlier. The entire global economy is currently racing to deploy these agentic workflows to slash operational costs and dramatically increase efficiency.
But they can't do it all at once.
Right, because they are running into a brutal physical bottleneck. There simply aren't enough data centers or advanced chips on the planet to run all of these autonomous systems at once.
So Lynn and Grady are looking at that exact bottleneck, seeing the massive, desperate corporate demand for agentic workflows. And they are pointing their $7 billion squarely at the companies trying to widen the pipe.
Exactly.
They aren't betting on which specific logistics company will win the shipping wars. They are buying the infrastructure that every single logistics company will fundamentally need to survive.
It's the ultimate structural advantage. The venture capital world completely recognizes that the transition from human-driven software to autonomous AI workflows is the largest economic unlock of the century.
Wow.
And that AI IPO pipeline we mentioned, it is entirely populated by the companies that possess the raw infrastructure to make that unlock a reality.
So what does this all mean? Let's bring this all together. We started with this incredible news out of Silicon Valley today, June 5th, 2026. Sequoia Capital, operating under the fresh leadership of Alfred and Pat Grady, has dropped a historic $7 billion late-stage AI fund onto the table.
A massive statement.
And what we've discovered is that this move is a loud, completely undeniable broadcast to the rest of the market. It proves that we have decisively transitioned from the era of capability experimentation, our chaotic high school science fair, to a totally ruthless era of global-scale commercial execution.
The pure hype has officially evaporated. The venture capital market has completely stopped rewarding companies for simply participating in the AI space. They are now demanding rigorous product-market fit, totally sustainable revenue, and deeply defensible infrastructure.
And why does this matter to you? Well, whether you are prepping for a huge strategic business meeting tomorrow, or maybe you're just analyzing your own stock portfolio, or honestly simply trying to navigate an economy that is shifting rapidly beneath your feet, you really have to update your mental model.
The metric for AI is just no longer cool novelty.
Right. It is measurable, undeniable economic impact. The technologies being funded by the $7 billion right now, they're designed to operate as autonomous agents. They're reducing massive costs, removing human bottlenecks, and forging trillions of dollars in real-world value.
The overarching question for the broader market is really no longer whether artificial intelligence will reshape enterprise operations. That's a given. The only question now is which specific late-stage companies will dominate the critical choke points of this new digital power grid.
And that leaves us with a final thought for you to chew on today. We've talked extensively about how we've moved from the high school science fair to pouring the heavy concrete for massive industrial factories.
We're in the scale era now.
Right. And we've established that scaling AI to meet Wall Street's expectations requires securing gigawatts of compute power and navigating astronomical physical costs. But if that is the new reality, if surviving the scale era actually requires a $7 billion war chest just to keep the servers running, what happens to the underdog?
That is a very dark question.
It is. What happens to the vibrant open source community or that classic Silicon Valley ethos of two kids disrupting an entire massive industry from their garage? As AI transitions into heavy infrastructure requiring literally billions of dollars in data centers and proprietary chips, will the future of human intelligence be exclusively owned and controlled by a handful of deeply funded tech monoliths?
It's concerning. Have we built a factory where only the wealthiest players are even allowed through the front door?
It is the defining tension of this new era. The barriers to entry have simply never been higher.
Yeah.
And it's definitely something to keep a very close eye on as these digital factories keep getting bigger and the independent startups desperately try to find a way over the wall.
Absolutely.
Thanks for taking this deep dive with us.
The future of artificial intelligence is unfolding, and it's happening at AI World Week, the flagship global event for innovation, collaboration, and transformation. This flagship global AI event is designed to connect visionary leaders, trailblazing entrepreneurs, and influential thinkers to explore the endless possibilities of AI. Experience groundbreaking technology that redefines industries and inspires progress. Join thought-provoking discussions on ethical AI, digital equity, and the transformative role of technology in our world. Build meaningful connections that catalyze innovation and drive impact. AI World Week is powered by AI World Society, a global movement dedicated to advancing AI responsibly and ensuring it serves humanity. Together, we're shaping a smarter, more inclusive, and equitable future. Continue your journey beyond the event with the AI World Journal, offering expert insights, in-depth analysis, and the latest trends shaping the AI landscape. This is your opportunity to lead, to innovate, and to transform the world with AI. AI World Week. We invite you to join us and embrace the AI revolution.